clockwise. And today we'll be looking at 5 oil stocks with potential upsides. Yes, 5 oil stocks with potential upside. Now, we'll be doing a technical analysis and a bit of fundamental analysis. Now, my name is Providence. Welcome to Clockwise. I don't do this alone. With a resounding virtual round of applause, welcome my guest, Mr. Kandem. Welcome to Clockwise.
Thank you very much for having me.
I always like seeing you close to the board every time because I tell them that you sleep on the charts. All right, now, before we proceed to what we are discussing today, let's first of all see what is going on around the country. We are hearing so much buzz about the Dangote refinery, and so many companies will be affected. Somebody was complaining the other day that people are selling off Aradel, selling off Seplat, and we know where they are going to. They're actually expecting to buy into the Dangote. Will do to the stock markets.
So, I think we had mentioned some time ago, I was on the show, and I said that I expect a lot of sell-offs to happen. Within, people will be rotating out of within the oil and gas industry and externally outside of the oil and gas industry. So it's a matter of people trying to rotate. I mean, it's next month. It's happening next month. The filing has been done. Yes. So people are trying to rotate out of, get more dry powder so that they can deploy into the oil and gas, into the Dangote refinery. You've seen the Johannesburg Stock Exchange is also interested in having a part of the Dangote refinery. Dangote himself actually played host to Goldman Sachs.
Yes.
Goldman Sachs, by the way, when you talk about the biggest investment banks in the world, Goldman Sachs is number one. You know, so whenever you have Goldman Sachs, has a momentous impact on what you're
now speak to me as an investor.
So for me, you know, a lot of people, there's a lot of buzz around around the Dangote refinery. But again, like I've told you, I always see value. We don't know the price yet. That would, I mean, even if they mention the price, of course, you know what happened. I said the same thing with SpaceX, 135, but it opened at 154. So the fact is, you can't really tell exactly where the opening price will be. And, I mean, if there is sufficient buzz, then you might have a higher opening price, and then the price will contract. The same thing happened with SpaceX. Went as far as 220, and then, but as at yesterday, it traded at 105.
I knew you did not buy into.
I did not buy, but I know. A lot of people actually reached out to me in my DM. What do you think about this SpaceX? There's even someone I told not to buy SpaceX. At that opening, pre-IPO, at the pre-IPO price, you know,
are we expecting that?
He agreed with me, but later on he went and bought it. You know, some people are like, okay, maybe let me just get this, but just in case
to prove you wrong,
maybe to prove me wrong or something. But eventually, when he saw it go down to 104, he called me again and said, I would have taken the advice. So the thing is, we might see a shoot up, of course, because if you look at the private placement, we had it was 3.7 times oversubscribed. You know, so we expect, and by the way, they are raising just about 5 billion. 5 billion,
yes.
You know,
in
private placement. So what that tells you is that, I mean, you might have more and more people get into it. So I think
today's conversation.
I think wrapping up on that, I think we might see a lot of dislocations, but it's also an opportunity for discerning investors to take advantage of those dislocations. Because for me, nothing changes with the fundamentals of some of these names. But the only thing is that because there is an elephant in the room, there is a masquerade, that has appeared in the market square. Every attention is on the masquerade.
All right. Now, let's start from Seplat because that's what is on the.
Okay, so Seplat, in terms of technical analysis, we've seen Seplat remain stubbornly high. It's at this point because, I mean, it takes a lot to really move the price. We are yet to see the impact of the new fine tuning of the price. You know, now it takes less to be able to move the price action, but because of the relative. The fact that a lot of owners of Seplat, you know, that's what I talked about something. I said, we have a very big challenge in the NGX stocks. The companies are usually very low, that some people are sitting on they don't decide to move the price, nothing happens. So that's why
The market.
not they float.
Okay.
Because if a company, if in the market as float, there is so much you can do to the 5% to bring. Someone is sitting on, a group of people are sitting on the 95%. So remember, what determines price action is like the bid, the ask and the bid, you know, and all of that. So when you have, very difficult for you to really move the price. So we've seen Seplat has over the past several weeks has been at this point, and I still believe though that Seplat has, speaking technically, Seplat has some imbalances to fill down. But on the other side, Seplat also, remember, Seplat is trading, is one of the cheapest stocks, oil stocks on the market. Yeah. I mean, forget about the fact it's 11,000. I think we talked about it exhaustively in the last show. Yes. It is one of the cheapest stock in the market. So for me, Seplat still has a long way to go, you know. And but I would have loved to see, this is not a very efficient price structure at all, because there are you need to fill out some unfilled orders. The way the market moves is because if anything happens to the price now, one of the reasons why a price action that moves straight up is not healthy for the market is that if anything, most investors usually are over leveraged in that plunge the price down very dangerously. I think that
all right, now I want you to speak to me as a retail investor.
Yes.
Where will you place your entry points at this particular moment?
If I'm to speak technically, because I mean a lot of things still are possible, even this Dangote listing, the refinery, huge market opportunity for Seplat to. I will be looking at this. I will look at this line.
9,000
as an entry point, because we had a lot of, before the up to, we had a lot of consolidation around here. We'll be looking at this, and at such a stretch, I could be looking at this 6,000. You realize that there's something here, and price. You know, there is something called market liquidity. Price always hunts for liquidity. All of this, what you have here, are a ton of imbalances that need to be filled by the market. So, but speaking technically, but speaking fundamentally, Seplat is still very, among the oil stocks, is still one of the most undervalued.
Are we still expecting a more bullish rally?
If you look at the price, if you look at Seplat is trading, unlike Aradel. Aradel is trading at 21 times earnings. Seplat is trading at 15 times earnings. So from a value perspective, I would rather buy Seplat than buy Aradel.
Just by the price.
I don't look at the price. I look at the valuation. If I offer you something, and by the way, this also gives me exposure to USD. These guys are talking about moving by year end. They're moving. They are looking at hitting a target of 46 cents in terms of dividend. 46 cents in terms of dividend gives you a better dividend yield than even Aradel. But by the way, Aradel is a name that I like so much. But I'm trying to put, if you put them side by side, you realize that even at this point, even buying Seplat at this point, you are still making way more than.
Let's put it side by side with Aradel. Let's check Aradel.
Okay, so look at Aradel. Aradel is, for me, so if you look at Aradel, this is on the weekly chart. Now, Aradel went very high, and this is one of the things I told you about. I said, when it goes that way, I rather like a market that, a price action where you have consolidation, move, then you have consolidation, move, you know, so that you are very sure that a lot of limit orders, a lot of orders are filled before it moves to the next zone. So, but if it doesn't happen, you now have this kind of immediate downdraft, because a lot of people, the way it works is, let us say, when the price moves like this, then what you tend to have is that a lot of people put their limit orders. A lot of limit, they are over leveraged. So once there's a reverse in the price action, there is what we call cascading liquidations. So people, you know what, that when you are in a buy position, when the market stopped out or you are liquidated, that becomes a sell order. That sell order pushes price down, including people that actually have sell stops. It still pushes price down. Then you also have more people. If it comes down, let's say some people had their buy order here. Then by the time it takes out this, it takes out this position. It becomes a sell order and pushes price down. That's why you could see very strong, bearish candles.
So where will you place your limit order?
Obviously, this is my sweet spot. This point is my sweet spot. And like I told you, for obvious reasons,
that's 1,000.
That's 1,000. Yeah, it's actually a range. It's not so from here, from 1,340 all the way to. I always like to go below, just at this point. Sorry, because there's 1,208. The reason is that liquidity hunters might want to take out this liquidity here. Remember that this has not been. This actually moved out. There's a lot of liquidity packed around here. So you might want to just take out the liquidity and reverse, and the price reverses. So I would want to put just before that liquidity, so I would want to put it somewhere here. It came down and didn't though it would have taken, I already had a position on Aradel, but it would, if I were to actually enter this market, it would have taken some of my limit order, because look at this, from here down to here. But I wouldn't put everything at this point. It would have taken out two of my positions, but the most of my position would have been just below this.
Okay.
Yes. So that is the first point I'll put, because I believe that if buyers, this is at the point where this is a demand zone. By the way, if you look at this move, it actually came from here. So this is a point where buyers will step in to defend the price.
Now, I know you've talked about Oando, and you actually analyzed the problem of Oando currently. Compare Oando to this. Are we expecting an upside from Oando?
No, if you look at Oando, and this is us being very honest, look at it from the technical side. So here is it. Here is Oando, and let us look at this. If you look at, there's something you observe about Oando. You've been having lower highs.
Yes.
Just watch this. So from this point, then you have this. Then of course you can take this as a bit of, but I'm not going to take this. I would rather go to this one, and then you had this again. If you look at, if you can put a trend line, you realize that this is a series of lower highs.
Is the market currently punishing them?
Of course, the market is punishing Oando. Oando is a name that people have been very loyal to this brand, to this. If you look at, in terms of what does the market care about? They care about, price, return on capital. So what you didn't have is that, and then of course we know why they are suffering. Sitting on ₦500 trillion of liability in terms of over 563 billion. Something a lot of analysts are not recommending Oando at all for a buy. That's why, if you remember the last time on the podcast itself, I told you that I'll be looking at Oando. For me is a turnaround play. Oando acquired Nigerian Ajib Oil Company.
Yeah, both assets.
The assets, yes. So for me, we're not seeing those assets yet. Of course, they did something. Oando's production increased by over 30% in the last earnings. But that's just one point. We are unable to make a decision or any judgment based on one point. We want to see how management can really use that asset to turn around the fortunes of the company. So that's what I'm saying. I'm not buying Oando as a major push. Okay. I'm buying Oando because of all the companies listed, which we are going to talk today, Oando is the one that can have the highest upside if those assets work. You are buying at the point where look at it. I've literally taken out. This is just the very last of the demand zone that is here to pick out. By the way, this is on the weekly time frame, and you look at it. I've literally taken out this this was even the one that I was saying, okay, this could hold. But you have seen it, it's given way. It is now targeting, it is now targeting this particular low.
That's what?
That low, this low is, that is 35.75.
Okay.
That's sorry, 33. Sorry, not 33.30.
Yeah.
It's targeting this low.
Okay.
So it is being heavily punished. So what I would recommend is, don't have exposure more than, let's say, between 5 and 8% for Oando, but have exposure.
Okay.
So that if Oando go, I'm not sure it's going to go to zero, but let's just say Oando continues to dip, it won't have such a significant impact on your portfolio. If you are building an oil and gas portfolio, Oando should not take more than 10% of your oil and gas portfolio, but at least give something to it, because if this turnaround story plays out, Oando could actually get as much as 20% of the portfolio.
Now, before we continue, if you're just joining now, this is Clockwise Live, where we do a technical analysis of all sectors on the NGX. And today we are focusing on the oil sector. My guest is here. Now, if not for Oando, if not for Seplat, and if not for Aradel, which other company will you actually invest in if you're a newbie?
So, there is a name that I think I've mentioned once on the channel. Which is also a turnaround play for me.
Okay.
But I think, like I said, I'm a value investor, and so far that has worked out very well. So that name is actually Eterna PLC.
Okay.
Eterna PLC is being, let me say, you know, when they talked about rebrand Nigeria, it's almost like that. So Eterna PLC
undergoing rebranding.
It's undergoing rebranding. It's undergoing a lot of turnaround. So we called it, I think, at 30. It was less than 30 actually. So let me see the place that we called it when we called that name. Okay, sorry. Just allow me. Okay. It was, I know it must have been this point, because it was less than 30.
Yeah, 28.85.
Yes, I think so. So we called it at that point, and I said that this is like a turnaround play for me, because if you look at it's even from the technical itself. We had this very uptick, very serious uptick, and then you can see how rapidly the price corrected. It couldn't sustain that, and then it came back down to this consolidation zone. I would expect this consolidation zone to last for some time, but after this, I'm looking at if what Eterna is doing is, if the management execution remains strong, then you could have it take out this, because speaking technically, there's a lot of liquidity here. Remember, everybody that's in a short position is either putting the stops here or their stops here. So of course, you know, market always moves from liquidity to liquidity, or hunts for liquidity. So I'm looking at the first takeout to be here. Then you could have a pullback, taking out this high, closing this liquidity. Then you can have a pullback. And then you can then before you begin to think of hunting for this.
That's a project.
That's
a projection.
That's a projection. So before you think of hunting for this,
50.
But I also expect a lot of sellers to come in to try to keep the price within this range. Okay. As people try to accumulate, institutional, especially institutional investors try to accumulate their positions here. Okay. Speaking beyond the fundamentals, I think that Eterna will be one of the beneficiaries of the Dangote listing. Okay. Because Eterna plays in the downstream sector. So I had mentioned that when it comes to downstream players, we are going to have a lot of names. Yeah. This is like Dangote refinery for me is like a rising tide that lifts all boats. Because what that will bring about will bring about a lot of product availability. So if those that were actually importing these products from overseas, all the logistic cost, all the insurance, and all of those things, those premiums will be out, and then you have oil literally at your backyard. It allows you to that reliability, that availability, and of course the cost factor itself will allow. In the meantime, impact, but. Dangote will literally be like the one setting the price. That also introduces some monopoly. Meaning, these guys used to make a ton of money because they could actually set the price themselves. But Dangote would literally be the one setting the price, because again, a lot of people will say, "Oh, except for maybe these issues about selling in US dollars and all of that, but it is way easier and cheaper for you to buy from Dangote and push
all right,
out.
now your last one before I actually start asking you.
Okay, so the next one, we've talked about Conoil. We've talked about Conoil.
Please bear in mind, we're going to start before we leave.
Okay, so I mean, let's talk about Conoil now. So Conoil is so. Now, if you look at the Conoil from the charts, you see something very interesting. Okay. You see a recovery story. Okay. Now, let me go back so you see exactly where we came from. Let me go back. So you now realize that this was a very huge run-up. If you look at this was a very huge run-up in 2025. For obvious reasons, this was such a huge run-up in Conoil. And then because of the issues around management issues and all of those, you had this sharp drawdown. Very, very serious drawdown. I'm talking about a name that actually had gone as high as 386. Yeah. That's a very serious drawdown. Yeah. But if you observe, if you look from here, you're seeing what looks like an inverse head and shoulder pattern. If you look at it properly from the charts. Now, we expect a steady recovery for this name, because I mean we know why it actually suffered this serious drawdown, and then especially when you compare this to the likes of, I mean, I know that this is in the downstream sector, but if you look at it compared to the other names in the oil and gas space, including that Eterna, you will see that we never had this kind of drawdown. And by the way, this actually took it down to a very excellent valuation. So, because for me, there is a way technicals actually blends in with fundamentals. Yeah. So when you have a company that was very highly priced coming down, it becomes cheaper. So some investors really don't look at, there are a lot of fundamental stories around management issues and all that. But again, some investors look at the fact that it is now very cheap. So that means a small movement in price action or a small investment can actually push up the price, Conoil in terms of its price action. So that for me is a very good entry point. Anything from here is a recovery story for Conoil.
So are we expecting that kind of movement? So
if you look at the chart, purely by the chart, you realize that you could be looking at that actually. You could be doing, because if you look at, this is actually
would this actually happen when Dangote lists his IPO? Or are we expecting?
There will be a temporary dislocation for these names. And I'm going to say that again. There will be temporary dislocation. Remember, some of these names are being held by retail investors. Yeah. Even for some high net worth investors that are holding this name, a lot of them will, a lot of people, investors are still driven by hype till today, till tomorrow. So a lot of them might want to rotate out of this name and invest in Dangote refinery. So I expect within the oil and gas industry, I expect some drawdowns as people rotate into the Dangote refinery. But for me, that also represents an opportunity.
You're always a long term.
Yeah, if I'm looking at this name, I'm looking at the next 5 years.
Okay.
Like they say, look at this. If you look at this name, this is just 2024. It was trading as low as, look at this, because when I tell you it was as low as 92, if you look at this, was this a price action? Well, this was a price action, and this was which is just 3 years ago. 73. This is 200. That's already like that's already like a 3x on your money. So the reality is that's why I keep on saying, investors, don't enrich your broker by buying, selling. But no, invest, do your analysis, look at the companies, look at the names, and then do your analysis. If it works out fine, then invest and allow the market to do its job. Don't go and babysit the market. A lot of investors babysit the market. Every day you'll be opening your chart, or you'll be opening your broker. If you're on Bamboo, you'll be opening your account and say, okay, which one? No, that's not what. I give an example. How many of us, when you buy a house, for example, or you buy a landed property, how many time do you call your broker? You really say broker every day and say, what is the price of the house now?
Price of the house.
No, you don't do that. I know that these are how those kind of properties are
physical assets.
No, they are illiquid assets. Yeah. But this one is a liquid asset, so the price action actually move from time to time. But if you can treat this as an illiquid asset, you will end up having a lot to.
All right. Now I remember vividly when you spoke about Access Bank.
Yes.
And I told you Access was a penny stock.
Yes.
And you made projections, and we actually achieved the things you said.
Yeah.
I'll ask you again today. What is wrong with Total? Are we expecting a turnaround?
No. So we know some of the things. Let me pull up. Unfortunately, using Total for technical analysis is not the very best because the price action has been it's been almost stuck at the same point almost forever. So look at this. It's been stuck almost at the. Incidentally, the last buy I did was actually it just came down to 540. I refused to put in my price here. I put in at 2 points. I even had a position up to this point.
Yeah.
Up to this. So I had my position up to this point, laddered in entry up to 390. But it just came and took it at 540.
Yeah.
Yeah. So we still know that this, let me tell you something. If there's a name that will suffer the most, with this Dangote would be Total.
Why?
Not because of the planned dislocation, but because Total's pricing power. When someone is actually like a major importer of products, and there's a domestic guy.
Yeah.
So your power, your pricing power diminishes.
Yes, it's true.
Diminishes. So the other name, if they were still listed in the market, but now they are no longer on the NGX, is MRS.
Okay.
MRS would have suffered the same thing. All the guys that are big on importing product would suffer because Dangote will literally be the one that will be calling the price.
Yeah.
So those margins, and Dangote can afford to do is refinery is a tiny margin business because they are not bearing the cost and the freight cost and insurance cost.
Yeah.
They can afford to give at something very tiny, just a tiny margin. And by the way, if you observe, Dangote has even gotten trucks to move. To move. So if you think you are not going to do the job,
to both downstream and midstream.
It can actually move the product himself. So you realize that for that reason, a lot of names would suffer initially, but I think that, like they say, if you cannot win them, do what? Join them. So I think that if they decide, Dangote, let's work with you and just push the product around, because Dangote is not going out to open filling stations. No, he's not doing that. But this guy already have the infrastructure on ground. So why don't you work with them? But in the meantime, I think they will suffer some dislocation based on what I just said. But over the long term, they will still.
Oil prices are not just affected domestically. We have global effects.
Yes.
So we are actually analyzing based on Dangote projection, the IPO. We still have the issue going on the Strait of Hormuz, and Trump very wrongly. What do you think will affect oil prices?
When you
get worse, will get worse than this particular one that it is now. What drastic change?
So this is not rocket science.
Yeah.
By the way, the global economy is running out of oil of reserve. So that means
Dangote has stepped in for them.
So you said?
And Dangote is coming to step in.
Dangote is coming to. You don't get what I'm saying. I said the global economy is running out of oil reserve, and you are talking about Dangote. What does Dangote have to do with that? So if you look at what is speaking technically, as a matter of fact, I still see some upside. If you look at it technically, you will see I still see some upside for oil. Now, the major issue I'm having is that if oil price keeps on going high, if the issue continues to persist, oil price might go high, And then if oil price remains stubbornly high, then even in Nigeria you will have, because if you look at it, Dangote is selling at international market, is buying at international market rates for Brent. That would also affect us too. But most importantly, that will lead to higher inflation. So the way it's connected is such that, and that's why you see, by now, Kirk Island would have been off the map. But Trump knows that if for any reason Kirk Island that's where Iran relies on to move oil. But if that happens, then that means a complete shutdown of the Strait. Of course, it's already completely shut, but that will make it
total shutdown.
The recovery even more impossible. And then, of course, that will still add to the cost of oil, which he himself wants to bring down. Yeah. If you look at what has happened today, you see that the stock market is pricing in the fact that oil prices will go down. Yeah. If you look at futures contracts, some futures contracts have been re-rated down. But the problem is that we don't have any clarity. So we can't really say anything for sure at this point.